presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richie. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last 2 years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one. Appreciate it, man.
Now, Tom O'Brien.
What is going on, everyone? This is Jacob Shoup. You're watching the Tom O'Brien Show. I believe I'm sharing screen. What is going on? We have a short week. We are definitely going to be gone on Thursday, and then we're also not going to be open Friday as well. Let's take a look. We got a packed day for you. We got Basil Chapman coming on this segment and the next. We have Tim Ord then in the third and fourth. And there's a lot I want to talk about too, so we see if we get that in. But let's take a look right now what we got going on in the market in general. You have the composite trading about 0.44% at 19,137. You have the Dow Jones Industrial about 0.15% trading at $44,802. You have the SPY trading right at 600, up 0.45%. Let's see what else we got rocking. DXY is still strong right now, trading at 107.01. Seems like it wants to stay up there. Crude oil hovering in those lower. That's cool. Give me 1 second to get off the option chain. There we go. Trading at 68.64, off about 0.44%. You had the gold contract up about 0.44% at 2,654. Now, again, folks, we are going to have Tim Ord on in the third and fourth segment. Really looking forward to hearing what he has to say regarding gold. And then we have Basil coming on here in a moment to talk a little bit about Bitcoin for sure. Let's take a look here. We have silver up about 1.04%, trading at $30.98, with copper off about 0.81% at $4.12. I'm going to talk a little bit about this later, but I was taking a look at Seals Q Corp, and they just came out with post-quantum RISC-V CPUs, which is pretty interesting, and then trusted platform modules, QVault. So I want to take a closer look at them at some point later in the show, but right now we're going to go over to our man Basil Chapman. Now, Basil Chapman comes on every Tuesday, and we take a look at his newsletter that he has. It's the Opening Call newsletter by Basil Chapman. We had some people sign up for this post-subscriber webinar just to get access to it, and they have loved it so far. Strongly recommend checking this out. Again, you get this newsletter. This is released every day, and then he has a long form, usually on Friday, kind of wrapping up the market for the week, seeing what's going on the next week. It is fantastic. It's such an absurd added value. But right now, if you've never tried this out before, I really recommend doing it. You get a 30-day money-back guarantee. For whatever reason it doesn't work out for you, but we're betting that it will, and you get access to this fantastic webinar he had November 14th. Basil Chapman, how are you doing?
I'm doing well. Thank you very much for that, Jacob. I much appreciate it.
No, absolutely. What are we taking a look at today?
Just as we speaking,
yeah.
The Dow yesterday made an all-time high of 44,816.67. It had a pretty sharp pullback this morning. It was down over 250 points. And right now, we are within an eye blink away of extending yesterday's gain. I mean, this is a remarkable market. Yeah. So I thought what I'd do at this point is just to show in concept, basically what I've done over the decades. I developed a technique where I try to identify the lowest low bar and then merely count each successively higher peak and alphabetize them sequentially on the way up. And so this chart that I'm showing here, this is the starting point, the low, and then you count each peak. And if a peak is obviously where the following bar has a slightly lower high than the day before or the bar before, then it becomes a peak, just like a mountain. And what happens is if the pullback doesn't take out the original starting point, but takes out the upside, left side, the left high, you start leg B. It becomes a floating letter until it becomes a peak. So that's the concept. And the concept is that the prices should go, if it gets upgraded from a buy signal to a buy mode, the implication is there should be at least 4 higher peaks. That's peak A is first, peak B second, peak C is the third, peak D is the fourth, and it can even go to E, F, and G, because at D, the obligation is to get you from a starting point to at least 4 higher peaks. You can go higher. That's where the yellow light goes on and you have to do some assessment. Right. So let me show you something very interesting. So we've been along the Dow since 2020, and then again added to a position in 2022. We still got that, and we have it as a trading position. But most importantly, look at this. The last high was on the, I believe it was the 16th of October at 43,325. They went to a peak D, and then just a bar or two later, it snuck to a slightly higher high. That was an E, and then it made an arch formation. This is the daily chart on the left. And look what happened. It pulls back to 41,647 on the 4th of November, and then you get a big gap. And this gap hasn't been filled, and it might not be filled for a little while. And what's happened is we've gone to a peak A, pulled back, made a cup formation, and then broke out yesterday to a higher high, an all-time high. And as we're speaking, we've made a leg B that's extending. So in the concept, what do I look for? I look for a confirmation of a buy signal that goes to a buy mode. That means I'm looking at the MACD, the moving average convergence strong, the relative strength, this little gray line strong, the 9 period nicely over the 14 period, preferably having not even broken below the 14 period moving average on the previous pullback, which it didn't. The stochastic over 80%, it's at 87%. On balance volume, not yet overbought, but rallying, and all those ingredients are there. So the way I'm looking at this is that there should be higher highs to come, and we should get at least 4 higher peaks. When we get to the peak D, that's when we do an analysis. Can it continue? Sure. Weekly charts are very strong. Monthly chart is really strong. So far, the bull phase is still in place. If tomorrow is a lower high, that becomes a peak B. And if on Friday there's a higher high, that becomes a leg C. If on Monday there's a pullback, that becomes a peak C. And if on Tuesday there's a higher high, when we meet again, that would be leg D. So it's next week. That's probably the very soonest, if everything falls into place, that you can get some kind of a top. That's just the Dow. So for subscribers for months, we've been talking about a rotation from the S&P 500 into the small caps, the IWM to the Russell 2000. So here's the Russell 2000, and we added to the position just the other day. And the Russell right now is having a little bit of a rest for the day because it's been on a tear. It's been actually turned into a leader. Now, remember I was looking at those peak Ds? Well, this is it's a fascinating thing. Look, here's the monthly chart. Back in November of 2021, the Russell made an all-time high of 244.46. It tumbles down to 161. What's the high yesterday? 244.98, with less than $1 away in 3 years after tumbling and coming back. I love that. Isn't it amazing?
It really is. Basil, please stay right there. I'm looking forward to seeing what else you have in store for us. Folks, stay right there. We'll be right back with Basil Chapman after this break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Welcome back, everyone. This is Jacob Shoup. You're watching The Tom O'Brien Show. We are joined right now by Basil Chapman. He's the author of the Opening Call newsletter. He just had a subscriber webinar November 14th, so now is a perfect time to check out that newsletter, and you get access to all subscriber webinars prior to that as well. Basil, we were talking a little bit about the Russell before we went to the break. Curious to see what else you have in store for us.
So what I was talking about was the relationship that I noticed some time ago where you had a leading sector and then a fading sector that should be moving together but didn't. And then that fading sector starts to come on strong. We've seen that in stocks. We've seen that in a lot of areas. And that was a relationship of the XLF, the IWM, and the S&P, the boss, the 500, and now the catch-up on the 2,000 shares that have been lagging for ages. And they've just made this potential double top, and yet all the technicals are still strong. So I'll leave that part there, and then I'll say another relationship, and a reason why we actually went into Bank of America a long time ago is because the S&P Select Financial Spider Fund, the XLF, which isn't really a purely bank, money center bank, because they have Berkshire Hathaway, but I think of it in terms of it's called the Select Financial Spider Fund. It's the biggie. So that had been doing very well. What was lagging and what I think was so important that needed to come on strong was the KRE, which is the S&P Regional Banking ETF. Sure. And that, it's really important for the regional banks to be doing well if the general economy is going to be doing well, because that kind of funding is really important for towns and cities, and that's important. So we've been along the KRE, the regional bank sector as well. Bank of America was kind of the proxy for the XLF, and we got along the KRE because it just lagged so much, and now it's done fantastic. And we even we have 2 positions in this, and it's doing very nicely. And look, there's the previous high was back in January of 2022 at 78.81, peak D, that 4th highest peak, plummets down to 34.12, gets more than cut in half. Wow. May of 2023 starts a big move up, peak A, peak B, peak C, and here we are in leg D, and has broken the midpoint. So this is really important because it's acting really well up until this point, and yesterday it went to leg D, and now it's pulling back. So the technicals are still very strong. I'd like to see it go on a little bit more upside action. But at this particular point, it's achieved what we wanted. And from here on, it's kind of a bonus if it can continue. So that same relationship where I was looking at one thing and it met the criteria to be able to swing to a lagging sector was the same thing that we were looking at. For instance, we've been long since the day after the low of 2020 for the IAI. This is the iShares Broker Dealer and Security ETF. But for subscribers who had missed that, we've been in and out of different positions, Schwab, etc. But on the big pullback that we saw coming, going into the, let me just put this right here, going into the low that we saw back in August, we wanted to get Robinhood. And the reason was because the Robinhood players tend to go to the gold sector and then they come to the Bitcoin. And so we were very fortunate. We got Robinhood right there on the low in August. Whoops, let me just scroll across right there. Robinhood. The low was at 13.98 on August the 5th. Nice. The next day we got long. So we've had this position and we've taken a little bit off, and we will add as a trading position, but it's only in leg C in the weekly chart. So the relationship there was with the Bitcoin. So we also went long. The Bitcoin, now, let me show you something very interesting. I'm going to go to Bitcoin, the Bitcoin fund. This is the Bitcoin Investment Trust. So the pattern I've been talking about for a long time, and it's got this cup, and I call this a cup and ladle breakout pattern when it goes right through the left side in a leg C, because it invariably still goes to a D. Well, lo and behold, the monthly chart's in leg D, the weekly chart's in leg D, and the daily chart is at a peak E. So I'm saying together with, I'll go back to Robinhood, see how they're going together. Look, Robinhood just made a little bit of a top yesterday at a D, and the Bitcoin is pulling back. So I'm saying this is just a moment to be a little careful there. But the technicals are still remaining very strong. And it's just fascinating that areas that were lagging, and if you look at Bitcoin, there was a period earlier in the year where it pulled back. Look, that July pullback way down there in the 50, this is the 50,000 area in Bitcoin, and look where it is now. So there's another thing that I've spoken about for years, are the 100 levels or the millennium levels, the 1,000s. So what did Bitcoin do the other day? It went to 100,170. It's now at 91,235. And that's telling me that this millennium level could become a little bit of a resistance area. But if you start to trade for about a week above 100,000, this is above 100,000 and 300, so 100.3, I think that's going to be that's what you need to see for Bitcoin to go even higher. But right now, I think it's got a well-deserved breather, and we've taken a little bit of profits from our IBIT. And this is another thing that is fascinating. If you look at this chart on the right, look at this beautiful cup and handle pattern. Not one of my favorite patterns unless you're able to get the handle just perfectly right if you haven't been in. Well, look at this IBIT. This is the actual part of the handle right here, because it only became an IPO. iShares Bitcoin Trust ETF only came out this year. So it's only, you can only see the handle, but you've got to know the core position is the Bitcoin. Now look how nicely it's gone to a leg D. And this is what I call a cup and ladle, Chapman wave cup and ladle breakout pattern to D. And it soars through C on the left side and goes much higher. So these are the things I just thought I'd put together in terms of giving you the background, the technical background for why we went into these positions and how they've panned out at this particular point.
Yeah, Basil, that was fantastic. And I'll say with Bitcoin too, and a lot of the cryptos, they tend to have this kind of psychology around them. Like Bitcoin has always wanted to go to 100,000, right? This has always been in the, I would say, kind of the cultural narrative behind it. And when you get close to that, right? I mean, this is a price target for people, and this is, again, more psychological than anything, but it works, right? And you can see that. It
becomes a focal point, right?
Precisely. It's the same way I look at like Dogecoin, right? It's at 40-something cents right now. When that hits one, I believe it will, it takes a breather and it comes back down. And then you get, you build momentum for the next push. So, Basil, that was fantastic. Really,
I should just mention that we were in the 12s in the GBTC. That's the Bitcoin, the fund that I showed you.
Yes.
Way back. And we rode it all the way to about 50 or something. And here's the chart based on Bitcoin. And where did it go to? It went to a peak D. And I remember it was November, December. And December it started to come down. And I went to a New Year's party, next door neighbor. And everybody there was talking about Bitcoin.
Yeah.
And these were adults and young people, everyone. I said, uh-oh. And I said, I've got a peak D in my monthly chart of Bitcoin. Be careful. And look at that pullback. It went all the way down to Bitcoin went down to 20,000.
I think of it the same way when I started hearing everybody talk about it. Basil, thank you so much. We'll see you tomorrow morning, 10 a.m., all right?
Thank you very much, Jacob. Have a great Thanksgiving.
You too. Folks, get Opening Call newsletter now. There's so much more where that came from. Stay tuned. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. Take a look right now. The composite up about 0.47% at 19,144. The Dow Jones Industrial up about 0.24% at 44,841. And man, you get that SPY right at 600, trying to crack the high of yesterday, but right under it by about, let's say, 40-something cents. You know, what Basil was saying, too, or what we were talking about, at least with the Bitcoin, you know, I mean, because there's no really underlying factors like driving these kind of things, you're really relying on psychological sentiment, essentially, right? And so when you start seeing these kind of big motifs developing, you know, these are from the people who are involved in these kind of asset classes, and they mean it. You know, they want to push to it. And whatever the other factors are of people just wanting to ride the wave or whatever it may be, they're all looking at similar price targets because that's kind of the agreed upon place they want to get, you know. And I mean, you can go to things like, you know, even Google Trends or something and type in, you know, look up how many people are researching how to buy Doge or how to buy Solana or whatever it is you want, right? Especially with kind of these cryptocurrencies, and it can give you kind of a better insight into what the, you know, the immediate, I would say, headspace is for a lot of people. So anyways, let's move on here a little bit. We go back to TFNN.com. If you look right here on the services tab, we have two fantastic webinars I want to bring to your attention. We've gotten some traction with these recently. People have been absolutely loving them, and so strongly recommend checking out these two webinars I'm talking about: The Secret Science of Market Tops, that's how to identify market tops, and 6 Secret Ratios Every Trader Should Know by our man Tim Ord. Tim Ord is the author of the Ord Oracle. You can check that out at ord-oracle.com. He comes here on the Tom O'Brien Show every Tuesday and Thursday to share with us his fantastic analysis. Right now, let's take a look again. SPY trading up 0.49% at 645, and then you have gold trading up 0.46% at 2,654. Tim Ord, how are you doing?
Good. So almost Thanksgiving. So
how about that?
Yeah, years fly by. So.
Year just chugs along for sure. What are we looking at today, Tim?
Well, let's take a look at chart one. Chart one is kind of watching this carefully. You know, there's a swag breast thrust indicator. This is something similar. Swag is not doing the setup because it needs to get below 0.4, and this last decline it didn't get below 0.4. Yep. But this indicator did, and the bottom window is the NYSE advancing issues divided by the NYSE declining issues with a 5-day average, and it needs to get down below 0.7, and it did on November 15th. And to really have a signal, kind of a sign of strength off of this potential low, you need this indicator to get above 3. And right now we're at 2.19, looks like. And I noted the times before. This chart goes back to late 2022, and I noted the times when the indicator got below 0.7, then rallied above 0.3, and it's 30 days. So this, if we can get above 3.0 on December 15th or before, that's 30 days, this would signal a sign of strength off of a low, and that bodes well for the intermediate term. So you can see the previous times when this happened, usually that's the start of a multi-month rally, you know, even longer. So I'm wondering if this indicator is going to trigger or not. And if the market remains actually halfway healthy going over the next couple of weeks here, that may trigger. So it hasn't triggered yet. But it did give a bullish signal at the last low, November 15th. It did get below 0.7, hit 0.68. So this indicator did trigger a bullish sign. We are long on the...
Oh, Tim, you still there? We might have lost Tim for a moment. I know that our producer is going to be hard at work getting him back on. Of course, we always have... or Skype is sometimes wont to have some technical issues. Let's take a look at some other things while we're waiting for Tim to get back on the line here. Oh, is that him?
Are you on?
Oh, yeah. Tim, can you hear me?
Yeah.
Fantastic. All right, let's keep going. Sorry about that.
I didn't hear anything on my end. But okay, we're still talking about on chart 1?
Yes, chart 1. Just talking about that's a bullish signal. It might mean a multi-month rally. And then you're about to qualify that, I believe, and then the audio cut out.
Right, we need to get to 3.00 by December 15th, which is,
okay.
So it hadn't happened yet. So we're kind of mid-signal. Will it happen? Don't know, but the market needs to actually be, in general, keep this rally going. So it's an indicator I'm watching here. So I'm also kind of careful here on several different indicators. Since we're heading into a new year with a new president, a lot of times there's changes, and the weakest in the election cycle, the weakest cycle is the election of a new president.
Sure.
So that's actually next year. So we'll have to watch more carefully how that develops. So let's flip to chart 2.
Absolutely.
This is a chart that actually does really well picking out highs, which is the second window up from the bottom is the SPX VIX ratio. And normally when this ratio hits the S&P's hit a higher high. This is a weekly time frame. And the ratio hits a lower high, which happened back in July, August, September of this year. That was a bearish divergence. I was watching that, and it actually, right now, that bearish divergence has gone away, and more or less we're in a bullish divergence where the S&Ps are making higher highs and this ratio is making higher highs. Even though it did form a bearish divergence in September, that bearish divergence went away.
Okay.
So the market, far as the SPX VIX ratio is concerned, this is bullish. So nothing significant as far as the top's concerned there. So let's flip to short term here.
Okay.
The next chart number 3, is just the SPY, just kind of a short-term view. As the S&Ps make higher highs, which is the top window, the VIX should make lower lows, and that's what's happening here. And if you notice, market, if today ends up, will be up 7 days in a row. Mm-hmm. You get that much momentum up 7 days in a row. It's kind of hard to achieve, but over the last year, it's kind of almost a common occurrence. Usually it's not the final highs. Usually you'll hit a higher high. It used to be 5 days. Now it's taken around 10 days. So that helps to keep the trend up. But if today's up, we'll be up 7 days in a row. There's about an 80% chance we'll be higher within the next 10 days. So I hear the music.
Yeah, it is unbelievable how strong this market has been. Tim, stay right there, folks. We'll be right back with Tim Ord of the Ord Oracle right after this break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined by the one and only Tim Ord, author of the Ord Oracle. Make sure to check his website out at ord-oracle.com after the end of programming today. Tim, before we went to the break, we were looking at the SPY short term, talking about potentially getting a 7-day in a row high, and if we do, what that kind of means.
Right. Okay. So we've been up 7 days in a row. What's interesting, I didn't really get panicked at the low about 4 or 5 days ago. But yesterday, out of the blue, we got a trend close of 1.25. We got, and the ticks that day were negative 294. That's a bullish combination. Suggesting a low will form early as that day, which is yesterday, to as late as 2 days later, which would be tomorrow. But anyhow, we did get panic, and we're panic. We don't have a 10-day trend, but at least we got a 1-day trend. So at least on a short-term basis, plus with 7 days up in a row, we're probably going to, at a minimum, rally for at least the next week. Can we rally into the year end? And that's probably we will, because seasonality-wise, this is the most bullish quarter of the year. So of all the quarters, this quarter has the highest percentage of being up. So we got the VIX very low level being down. We got panic yesterday in the ticks and trend. You got 7 days up in a row. So you got a lot of things that are on the good side for this market to continue to rally. So I remain bullish. Short term, and could be. I'm kind of looking for intermediate term, but really haven't got the signals yet to determine that. So anyhow, bullish for now on the S&P's at least to year end. So we can move on to the gold here.
Absolutely, I think we should. Let's take a look at what we got going on in the gold.
All right, this chart is inflation-deflation ratio. Made a triple bottom. That's that shaded green area. The signal, how to get a signal on this indicator is the when the inflation-deflation RSI falls below 30 and turns up. It's a signal, and on November 15th, we had a reading of 29.69. That was the low. The market has since rallied. So that's a buy signal on that type of indicator, and that red dotted lines across the chart show previous buy signals. Another type of buy signal is the chart number 5. If you can pull that up. Yep. This is the top window is GDX. Next window down is a daily cumulative advanced decline with this Bollinger Band. Window below that is advanced cumulative advanced decline with this Bollinger Band. Bottom window is a GDX GLE ratio with the Bollinger Band. The signals are generated when 3 of the 4, preferably all 4, hit the upper Bollinger Band, which would be a top, or the lower Bollinger Band, which would be a bottom. And the blue lines are the sell signals. The dotted lines blue dotted lines are the sell signals, and the dotted red lines are the buy signals. And this shaded green area is the last time. I think that came right around November 15th also. All four of those indicators fell below the lower Bollinger Band. So that's another short-term buy signal. Let's flip to chart 6.
Okay.
And I want to get to chart 7. This is a bigger buy signal again. This chart was triggered back in May of 2024, and the bottom window is a monthly up-down volume cumulative. Second window up is a monthly advanced line cumulative with the Bollinger Bands, and signals are triggered when it falls below the Bollinger Bands, the sell signal, and when it pops above the Bollinger Bands, the buy signal, and those buy signals generated in May. So these signals last about a year and a half at a minimum. Some can last longer. The dailies are on a buy signal, the weeklies are on a buy signal, the monthlies are on a buy signal. So let's flip to chart 7. This is kind of the chart I wanted to get to.
Okay.
Here's another buy signal on a short-term basis. It's a little bit different, but this is what I want to talk about. The bottom window is advanced decline with an 18-day average. And the next window up is advanced up-down volume with an 18-day average. When both those indicators fall below 40 and turn up, and all those lines, red lines in the past, are the times when those were triggered. And this last one was triggered about November 15th again. So it's kind of another short-term buy signal. This is usually a multi-month buy signal. It's not usually any shorter, but they work pretty good. But what I'm thinking developing here, if we go to the top window, is GDX. And I think there's a head and shoulders bottom forming here, where the head is the 2022 low around approximately 20. And the neckline's up around 43, which is that red line up there.
Yeah.
And I think head and shoulders pattern seems to work pretty well for GDX. GDX have kind of a different structure of what works for it. And this head and shoulders pattern seems to work. But if this is a head and shoulders pattern, we should see a sign of strength through that 43 area. And the measurement of this head and shoulders bottom would be the bottom of the head, which is around 20, to the neckline, which is, say, 43. So that's about 23 points. You add 23 points to the neckline, which is around 43. You get up in the mid-60s. And I'm thinking this is where this GDX is going to go, mid-60s. The pattern's pretty big. This head and shoulders pattern works back to mid-2020. So it's a large pattern. On a monthly time frame buy signal, we get a rally. It's going to at least last for the next 12 months. So I think the next 12 months, we get to 60, 65, I think there's possibly a good chance, because once you break the neckline, you should see a sign of strength, and that's usually kind of an impulse way through that line. So I think that's what's going to come probably in the next several weeks, maybe first part of next year. I think it's going to approach that 42, 43 area and actually accelerate. So there's a lot of bullish stuff going on here for this gold market. I don't know what gold's probably going to go with it also, obviously. Right. But I think the gold stocks are going to start outperforming gold here. And gold's kind of been leading the gold equity market for a while. I think that's going to reverse. So there's at least a 50% move, or a little bit better than that, right in front of us. So will the other equity market perform, the S&Ps? I'm not for sure, but this market looks pretty solid. I'll put it that way. So, that's why I wanted to point that out. So this is in development, but there's a lot of different type buy signals that are forming on GDX over the last year, and they keep flipping to buy signals. I got, on the short-term basis, I got 3 different type buy signals. So the short-term low we had here November 15th, at a worst-case scenario, I guess there's a chance we could test that, but that would be the worst case. We're not breaking down here. We're forming on bottom. and that we think probably are already turned the corner to the upside.
Absolutely. Yeah, it'd be nice to see some life kind of like breathe back into it. I mean, earlier this year, some of the miners have done like exceptionally well. Nice to see the GDX kind of get back up there and make these massive moves. Tim, thank you so much. I know we're not going to have you on Thursday since it's Thanksgiving, but wishing you a happy Thanksgiving, and we'll see you Tuesday in December.
All right. Wish you happy Thanksgiving too. See you next week.
Absolutely. Tim, thank you so much. Folks, make sure to go to ord-oracle.com. Gotta check it out. Be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. We just have a short segment right now. We were joined today by both Basil Chapman and Tim Ord. Again, strongly recommend checking both of those guys out. Of course, you can find Tim Ord at ord-oracle.com. And additionally, you can go over to the services tab of TFNN.com. We got 2 fantastic webinars for you there from Tim Ord. And then for Basil Chapman, again, recommend just as strongly checking out the opening call newsletter. And that can be done if it's your first time. For a 30-day money-back guarantee, for whatever reason it doesn't work out. If you missed any of those segments or want to go back over what either Basil or Tim was saying, we're going to have this whole episode uploaded for you on our YouTube channel at Tiger Financial News Network, in addition to the separate clips themselves. If you decide to go ahead and watch those at the end of programming today, please consider giving the videos a like and giving our channel a subscribe. It helps us out immensely. We can continue to bring you the content that we've been bringing you. All right, let's take a look quickly. I'm going to run through all this at some point, probably at the end here. How much time do I got left? Quickly, composite up 0.66%, Dow Jones Industrial 0.31%, and then we have the SPY up 0.5%. I can probably talk a little bit more about this tomorrow. I want to talk about, I think it's Red Cat. These guys, this is a kind of a freaky one, right? These guys make drones, and they just landed a deal. Now, these are personally deployed drones, right? And they just landed a deal with the U.S. military to supply production selection for U.S. Army short-range reconnaissance program. So, obviously, unreal move up. The RSI is high on this. You're going to get a pullback, no doubt, from it. Off 13.89% today, trading at $8.28. Kind of hovering around a low for the year of $2.31. But if you've seen anything of what's going on, in Ukraine and Russia, these kind of short-range, small platform drones, this is conflict now. And I would say as well, this kind of building out of the border security, which I think is going to happen under the Trump administration, it's going to be, technology heavy. And this is where companies like this come in. Very fascinating. We can go more in depth tomorrow, folks. Thank you so much for joining me. We'll see you tomorrow morning, 9 a.m. with Tommy O'Brien in the morning market kickoff.
Building wealth